Well, exports are a huge part of the economy. It's very important for the manufacturing sector and does actually use over 200% of GDP. So the fact that we are actually seeing these sort of risks and challenges are going to be headwinds for the export outlook and the economy. I think there's a couple of things. I mean, obviously, directly the impact of China, the impact of Russia on Singapore's exports quite small. It's only about 0.5%, but there will be the indirect impact, not only from sort of lower trade from Europe. We've also got, against that backdrop, we've got more tightening from the US Fed, which will see consumer demand also slow, and then we've got China. In particular, we're sort of very worried about these lockdowns that we're currently seeing and how that's actually going to impact both demand for Singapore exports, but actually the supply chain disruptions, particularly in Q2. So we have actually overall, we do expect that export momentum will ease. But there are some positives. We do need to remember that, we've seen some more easing in restrictions in Singapore, which is definitely going to start seeing services act more of a driver. And we've had the reopening of borders.
Sian, I got to ask you, October, and that's about still 6 months away, which is literally a lifetime. Are you expecting MS to have to get even more aggressive?
At the moment, we're sort of looking for them to sort of stay on the sidelines. This is actually assuming that, yes, we do expect that inflation, we're not at the end. We do expect that inflationary pressures will remain. We're going to see inflation remaining above 4%, core inflation heading up to 3% odd. For most of the year, but inflationary pressures should start to ease in the second half. So we do think that we will actually start seeing it drift down. That should give them some room to assess and actually stay on the sidelines. Remember, they've been much more, they've been ahead of the curve in terms of tightening. Of course, there are risks, and one of the main things is actually, whether or not we see further commodity price hikes. Due to more sanctions in Russia, and the other thing is if we actually start seeing some wage pressures.
Sian, can I just broaden the conversation a bit and look at the neighbourhood in ASEAN with particular reference to Malaysia, which has been, as you alluded to, opening up as well. And then you got the benefit from higher energy and commodity prices across the spectrum. Have you got a line on where that puts headline growth over there?
So we're looking for Malaysia's GDP to grow about 6.3%. Now, we do need to remember, yes, they are going to benefit from the higher oil prices, but not all parts of the economy will. And in particular, the fact that we do this higher inflationary backdrop, which is not just Singapore, but Asia more generally, will start to weigh on sort of consumers. But again, like Singapore, Malaysia is going to be benefiting from this reopening. So there's a lot of catch-up demand. Both in terms of the domestic economy for consumers, even investment in terms of construction, but also this reopening of borders. And that should actually provide some support against sort of these other external challenges that we're seeing.